Hey, this is John from Next Crypto Prices, where I look at price action one wave at a time. I am back with another update on Cake USDT. We are looking at the 4-hour time frame on Binance. So for the better part of 7 to 8 days, Cake has been doing a lot of ranging or sideways type of trading. However, this does not invalidates the minimum expected target I have for wave 3. Nothing has changed to this bigger picture. As a reminder, minimum expected target for wave 3 is at $5.10. This is the 161 extension between the top of wave 1 and the low of wave 2 that was formed on the 11th of March. Before I go into the 7 to 8 days price action, notice once again how the 70.2% retracement Fibonacci that I took between the high and the low is doing its magic. It was hit once, twice, 3 times, and it has not allowed price to get through it. 70.2% retracement is a must-have level in your trading toolbox. Price are attracted to it. When they reach it, you have a few options. Either they go through it with volume and conviction, and that's a sign that the high that you've been taking this retracement from is going to be broken or at least reached, or price stalls for a while, which is what's happening here, or price reverts in the opposite direction. 70.2% has done its thing once again. So let's look at the 7 to 8 days price action. Now, from the low we made, or price made in on the 11th of March, which marked the low of wave 2 here, we had 5 waves to the upside. We tagged 281, a little bit more, 282 maybe, and then we reverted. So this tag of 281 corresponds to a wave 1. We had 1, 2, 3, 4 as a contracting triangle, and then a last impulse as an ending diagonal for wave 5 of 1. So what follows is an ABC to the downside. We had that ABC. C is 5-wave structure to the downside. We have a low formed on the 19th of March at 223. Now, this level here marks a line in the sand for the microwave 3. Microwave 3, if I put some extension, is supposed to take price, or is expected, should I say, to take price. If I look at the 1618, it could take price, look at that, at $5.10. Amazing, isn't it? You have an impulse that started and that has the same targets for wave 3 compared to the impulse of a much higher degree. So here, this $5.10 is a level of confluence. Two different wave counts, two impulses of different degree have the same confluence level for wave 3. Amazing. Now, if I go back to it, wave 3 we said is expected to go to $5.10, $5.10, assuming that this is the low. So here we have an invalidation level at $2.23. Okay. Now, assuming that was the low of wave 2, we were expecting to go back up to go for this $5.10 in a 5-way structure. Price action decided otherwise and gave us a diagonal for wave 1. Now, this diagonal fits all the criterias. You have a wave 3 that is higher than wave 1, a wave 4 that gets back into the price territory of wave 1, and a wave 4 that does not break below wave 2. And the last two most important thing is that wave 5 slightly broke higher than wave 3, however, failed to reach this ascending trend line that connects the top of wave 1 and wave 3. So essentially, you have a diagonal formed here. This diagonal is of a degree lower compared to the previous 5-way structure we had. So essentially, price action is nesting, is creating a 1-2-1-2 structure. Now, from the top of wave 1 here of this diagonal, you expect an ABC or WXY to unfold for wave 2 correction. Technically, we got it. There is an A, there is a B, and there is a C. The C pierced through the 61.8% at 247, retracement taken from the low and the high here. And now you expect wave 3 to unfold of a second lower degree. And look at what price action is doing. Price action is doing something very similar to the diagonal it did earlier, except that it's a degree lower. So the expectation is the following. If price does not break this low here at 246, then we have, it increases the odds that price is going to do an impulse to the upside for wave 3. Let's look at minimum expected target of wave 3. If I take the low of wave 2 at the start of wave 1 and the high of wave 1 with the low of wave 2, I look for the 1618, I get $3.45. Within this current 1-2 setup, minimum expected target for wave 3 is at $3.45. Okay? So the picture is bullish for as long as 246 here does not break. Okay? If 246 gets broken, that invalidates the bullish target of 345, but it will indicate that price has not done correcting. That what we had here, ABC, is not the end of wave 2. Yeah? So most likely we have an A complete, then a B, and then a C. That's a possibility. Same goes for this invalidation level at 238. For as long as price stays above, then the $5.10 target for wave 3 in circle is at play. However, if price gets broken, then that's an indication that we have, let me remove the marks, that price is probably not finished with this wave 2 in circle correction, and that we should revisit the low, which supports the idea that price is in a range for quite some time, 7 to 8 days, and that failure to break the high here strongly suggests that the mid is going to be revisited. Breaking the mid, which is supported by a breaking of this level at 246, strongly increases the odds that the low is going to be revisited. Okay, so you have it for cake. The picture is very bullish, and generally speaking, when price action is nesting, meaning that you have a 1-2 and then of a lower degree another 1-2, and then probably, because this is probably what's happening here, I did not mention it, but this price action here that is very similar to the one before is probably another 1-2 of a lower degree compared to this one. So essentially you have a 3 level of nesting. That's very bullish. It's like coiling a spring. You tighten it, you tighten it, you tighten it, and once it's done being tightened, it springs back in the other direction quite sharply. So if this level is respected and not broken, I would not be surprised if the 70.2% retracement at 281 is finally broken. After all, we've went to pierce through it 3 times. One observation related to this level, I'm going to remove the squiggles, is the volume. Look at the volume reaction when price pierced the level here. It's a very significant level, otherwise price would not be stuck underneath. Yeah, so 281. Price breaks to 81. Look at the volume. The volume is good, yeah, but it's not in black, and meaning it's not in black, meaning there is no like deviation of enthusiasm of buyers compared to when price was making a move to the upside with this portion of the chart. Now, the fact that there is not such a strong volume at this level tells me also, so it says once there is not a lot of willingness to get through it, but there is also not a ton of supply coming out of it, potentially indicating that the next time it's being touched, it gets broken. So let's move forward. Next time it was broken, we got higher compared to this high, not by much, but we went higher. Look at the volume. A bit more significant. It's in black. And I think it's higher than the previous one. Let me see. No, it's the same level. I need to highlight this one just to be sure it's the same level. I don't want to talk nonsense. Okay. No, like this. And that's my level. And yeah, it's higher. So price went higher and volume is higher and it's in black. So it's significant. Now, still not a ton of supply getting out, because if you look at the move after touching this volume for this level for the second time, price didn't go that far and the volume was almost non-existent in this sideways correction, a tad bit more for the low of wave 4. Third time this level is touched, do we go higher actually? So this one, price went to 283, 2,839, and this one is 2,850. So price went higher, not higher volume. So meaning supply is not eager to dump on the limit buyers or those that are buying on the break of a level when that occurs. So that's a good indication. That means that there is not a ton of supply up there willing to send the price down to the lower part of the range, for example. Yeah, so that's a good indication. What was supporting also the idea that price was doing a 1-2-1-2 nesting between this high here and this high here is the RSI divergence. So you know that wave 3 and wave 5, they divert. They are expected, should I say, they are expected to divert in an impulse, meaning that the RSI prints a lower high compared to the high made for wave 3. That's the case here. Checked. And here again in this diagonal, you have a price action that does not match the RSI. We have another divergence. So also the volume for wave 3 was much higher than wave 5 on the first attempt at the 70.2% level. The volume was much higher on wave 3 than wave 5 on the second attempt at the 70.2% level. So all of those indications valid or support the idea that this is indeed the fact that I highlight a 1-2-1-2 is actually supported by volume and RSI and also by price action. Like there is not a ton of selling. So it is expected that if this level is not broken, the next time we get to 280, this is gonna break. If it does not break and does something very similar to this one, then you might actually be again in a nesting formation. Yeah, so that's the assumption I'm making. The picture for cake is very good. It requires patience, like many times in trading. It's not because price is not going at the expected minimum target that it's not going to happen. The only way it does not happen if it's a level gets broken and that the invalidation is triggered. And you have them. It's two, what was I saying? The level, it's 246 for one wave count, and the other level, 236 for a different, for a wave count of a much higher degree. And should there be a flush down, if price breaks this $1.12, then all bets are off. There is no more motive structure. But so far, the picture looks good. Keep watching those levels, and I'll be talking to you soon in another video. You take care. Bye-bye.